Hey traders, Jason here from Leavitt Brothers. Before I get started in this video, just a quick reminder. I put together a mini masterclass in trading. It covers a lot of the stuff I wish I would have known when I was getting started. It's great for beginners and it's just as helpful for advanced traders who need a little reminder of some key concepts. You can check it out at the link below. All right, so in this video, I'm going to talk about day trading. Okay, most of you are familiar with how I use MACD and Stochastic on multiple time frames to swing trade stocks. Here I talk about using the same indicators, but instead of holding for several weeks and shooting for bigger gains, I'm just doing day trades. Okay, I do this all the time. Whenever I'm not sure what's going on, I shorten my time frames and just look for easy trades during the day instead of looking for bigger trades over longer time frames, which if I'm not sure what's going on, I don't really have confidence in those. All right, so let's go through some examples. All right, so here's GAN. GAN, it went up a whole bunch, came back down quite a bit, from high 20s to, below 20. So it fell like, 30, 35%. Put in a little bottom here. And then it started to move up. It moved up with force. So what we're going to do here is, like, you see this candle, didn't play that. It was on my radar, but didn't play that. It just kind of happened out of nowhere. Next day it does this, where it opens up, tests lower, and then closes at its high. So coming into this week, I was... it was on my radar, like, hey, this stock can be tradable Monday. So I'm going to focus in on this candle, which is Monday. Okay, and in all these examples, I should say, like, the chart on the left is the daily, and the chart on the right is the 5-minute chart. Okay, so I still get a lot of clues from the daily chart, even if I'm day trading, but then I zoom in with the 5-minute chart to get actual signals. So if I zoom in on this day right here, here's the gap up. Okay, which for some people is frustrating. For me, I don't mind it, because I'd actually rather day trade a stock which is really strong and moving up than day trade a stock that just opens flat and just kind of bounces around in a range and doesn't really have much momentum. I find when a stock gaps up and it can hold those gains, that's a stock where there's like definite interest in there. All right, so this stock gapped up, came down, tested its 21 at the same time the stochastic cycled down, came up, put in a lower high, tested the 21 again, and again the stochastic cycled down. At this point in time, you could draw a trend line if you want. You got support down here, resistance up there. You got two tests on the 21, two times the stochastic cycle down, and then it busted out and moved up about a point. Okay, to me, this is perfect. Okay, the key to trading is find your trade. Like, find a trade that works, find a trade that jives with your personality, something that, you could do, something that's like within your comfort zone, then you could do. Then you want to practice it and get really good at it. And once you get good at it, then you want to size up. Okay. So to me, this is a perfect trade, even though it only goes from 24 to 25. And some of you might say, well, that's not worth it. It's only a point. Well, to me, get really good at this. And then, you get good by doing 100 shares, then 200 shares, then 500 shares. And a year later, you're doing 5,000 shares. And 2 years later, you're doing 10,000 shares. And what used to be $100, $200 is then $8,000, $10,000, $12,000. Okay, to me, that's the key to trading. Find your trade, practice and get good at it, and then size up. So to me, the structure here is perfect. Support at the 21, stochastic cycling down, stock moving very orderly, and then it moves a point, which is just perfect for me. All right, let's go to the next one. All right, so here's LVGO, super strong stock. They're getting acquired, and on the news, the stock actually dropped quite a bit from like 150 down to like basically 110. Formed a little base here. And then, so coming into this week, I was thinking, hey, this thing is forming a base near its 21. Stochastic on the daily has cycled down and is starting to curl up. I'm looking to play a bounce. I wasn't looking for like a huge move up to new high, but I'm thinking, hey, maybe, within this range of here to here, maybe the stock could just bounce within the range. So I'm going to zoom in on Monday, this candle right here. Okay, so again, over here on the right, it's 5-minute chart. Stock gaps up. Again, to me, not a problem. Because I'd rather buy a stock that's strong than a stock that's opens neutral and has to gather strength during the day. So stock gaps up, moves sideways to the 8, the blue, not the 8, the 8. Moves sideways to there. It moves up from here, but then we get a trend line break at the stochastic, Okay, so at that point in time, I'm not interested in getting in right there. But it comes back down, touches the 21 and bounces at the same time the stochastic cycles down and moves up. So to me, that's an entry. We have a strong stock moving up. This right here is a pullback within the uptrend. Stochastic cycles down and helps you with the entry. Stock then moves up, comes down, tests the 21 again, and once again we get the stochastic cycles down. So the point of the stochastic is it helps you time your entry. Okay, within this whole area here, you're wondering, well, you're thinking like this is a strong stock, it's going to go higher, but I don't know where to get in. Well, I'm using the stochastic to time my entries. Okay, if you're getting in here and here, you're getting in pretty close to good levels. And when you have and then when the 21 supports it there and there, it's a nice 1-2 punch. Okay, and then of course the stock, there was a little resistance line that formed there during the day, and the stock broke out there and just continued up. So really great trade. Like I said in the last chart, just pretty simple, pretty orderly. Get really good at it. Do 100 shares, do 200 shares, and after a while you're doing 1,000, 2,000, 3,000. So instead of making a couple $100, you're making a couple thousand. You just ramp up. Same trade, nothing changes, just bigger size after you develop your skills. All right, here's ZM, Zoom. All right, so stock, huge rally, basically trading in a range here. Okay, which is perfectly fine, nearly a 2-month range. Dropped to the bottom, but immediately recovered. Okay, and so then now it's been off to the races, and today it's at a new high. So we're going to focus in on Monday again, just like the last two charts. Stock gapped up. So over here we got stock gaps up. Okay, pushes higher. If you're not comfortable chasing it higher, you could wait. Okay, comes down to test the 8, comes back up, test the 21. Okay, at this point I got support there, I have resistance there, I have a trend line break here, okay, and I got support at the 21. So the combination of support over here at the 21, stochastic breaking through a trend line, price action tightening up, that's a really good low risk entry, because if you get in over here, your stop is just below the low. So if it doesn't work, you're losing a little bit, but if it does work, you can see what happens. Now, not all of them work that well, but you can see what could happen. Okay, low risk, not sure what the reward is, but it certainly is going to be pretty good. Then the thing rides the 8 all the way up. Okay, not bad. Again, do it with 100 shares, do it with 200 shares. A year from now, you're doing 1,000 shares instead of making, this is 10 points. Instead of making 10 points with 100 shares, you're making 10 points with a couple thousand shares. The money adds up pretty quickly. All right, another example, Datadog. This is today's chart. Okay, stock moved up, traded in a range. Okay, so today we're getting a pretty nice move here. Stock opened in negative territory and just went straight up. Okay, if you're not comfortable chasing 5 consecutive up candles on the 5-minute time frame, well, sometimes you won't get to trade it, but in this case, we still did. Okay. So stock moves sideways. We have a touch at the 21 there, a touch at the 21 there. We have a resistance line coming in here. We have support here. We have the stochastic is breaking through a trend line. Not a good trend line, but not a good trend line because of the way I drew it, but it's actually a really good trend line as far as trend lines on indicators go. So the combination of right here, second test of the 21, at the same time where the stochastic is breaking out from a trend line, there's your low risk entry. Stop goes below a recent low, and stock is done fairly well. I'm in this trade. Okay, I did this one. I mean, so far 84 to 85. It's actually up higher, but I captured this chart like a half hour ago. So again, this only moved from 84 to 85, but that's fine if you get good at doing that one trade. Simple trade, strong stock, identified early in the day. Sit back and wait for support to come in, wait whether it's trendline support, whether it's a moving average support, wait for the stochastic cycle down. If you could do this and make 1 point and get really good at that, then you just size up and you could pretty much peck away and just make consistent profit. Another point I want to make is that you'll notice a lot of these trades are with a lot of the popular stocks that you've probably been swing trading. which I find is perfect, because stocks that do really well overall for swing trade, they tend to be the best stocks for day trading too. Okay, if I look at this chart of Datadog, there are a lot of days in here where you have 5-point range, 6-point range. There are a lot of opportunities here to day trade the exact same stocks that you swing trade. Most of my day trades are in these types of stocks. I don't day trade penny stocks. I don't day trade like random $3 stocks hoping to make a huge gain. I focus my attention on the stocks that are doing great overall, and then I zoom in and trade those over and over. Okay, so I don't have a position in Data. I didn't have a position in Datadog before today opened, but it's not uncommon for me to have a position in a stock, and I might day trade around a core position. All right. Here's Amazon. A lot of people watching it. We have support at the 21, support at a trend line, resistance up here, classic ascending triangle pattern within an uptrend. Let's zoom in on a couple days ago, okay, which is that day stock gapped up, and it looks like it gapped up and just went all day and closed, opened at the low, closed at the high. So let's zoom in with the 5-minute chart. Here's the gap up. Stock went straight up. If you're not comfortable chasing, which personally, I'm not, I usually wait. Waiting means I miss some trades because they never really set up, but waiting also means stock comes down, tests the 21 at the same time the stochastic cycles down and triggers. So that gives me a chance to get in here rather than just close my eyes and blindly chase it here. Then here the stock just kind of steadily trended up above the 21 for a while. Okay, and then how you manage it, I enter most of the time, not most of the time, I enter as I've described, but I exit with just on the price chart, just following it up with, putting stops below lows. Or if you have a situation where, like the stochastic hovers up here and you can draw a trend line, I will, if it combines with I don't really like the way it's acting and the stochastic breaks down, I'll use that as a reason to get out. But most of my exits are just following up under the price chart and just, doing it that way. In this case, it just kind of grinded higher and there was no reason to get out until you got, over here where the 21 and the previous low is taken out. All right, let's go to one more chart. Here's Domo, which we've traded numerous times since it was a single-digit stock back in March. So on the daily chart, we have a positive divergence. Okay, we have a breakout here of the stochastic. So the stock was kind of in play here. While it was doing this, I was just kind of watching it, not really that interested. But so this happened, and then I was kind of looking at it for the next day. Okay, so let's focus on that this next day here. So the stock gapped up, pushed higher. I didn't do anything. It falls back into this zone in between the 8 and 21 at the same time the stochastic cycles down. Okay, then it pushes up to a higher high, comes back down, forms this bottoming cup pattern, breakout from the stochastic. So that's another, it's an opportunity to add, or it's an opportunity to just initiate a position if you haven't already. So you got a nice cup pattern here, resistance here, pauses right below the resistance level, and then as you can see, it breaks out and runs. Okay, pretty orderly, no big spikes or anything. So if you're here and you want to give it some time to move, we're lucky here that we didn't have a big dip back into the previous range. So pretty orderly. Again, I like the breakout on the stochastic. Got some support here from the 21. Pretty good trade from a stock that was doing well, but then had lost it. All right, that's it. Hope you got something out of this. Again, the key is just find a simple system that works for you, that works for you, something that's in your comfort zone, something that you could do over and over and over. And then once you could do that, once you practice and get good at it, then instead of doing 100 shares, 200 shares, 500 shares, you're doing 3,000 shares, 4,000 shares, 5,000 shares. Instead of making a couple $100, you're making a couple $1,000. Same trade, same everything, just bigger size. Keep it simple. All right, again, thanks for listening. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. Also, check out my free Masterclass in trading class at the link below. All right, see you next time.